Okay, good afternoon, everybody. This is Doug Morris, Sharesight CEO. Thank you very much for joining us today. Today's topic is tracking tax losses in Sharesight, aka using tax losses to offset gains to potentially reduce the amount of tax you pay on your investments. So what I'll do is I've got just a few slides to go through, just more from a kind of a background and a definition standpoint on how to think about tax losses in your portfolio. And then I'll jump into Sharesight itself and show you a fairly straightforward and simple example as to how you can use our software to examine your tax losses. Today's webinar will be a bit on the shorter side. It's a pretty straightforward topic, and it's a kind of a core and kind of obvious feature of the application, but it's always worth kind of just ensuring that you're across everything and understanding how the software can help you as well. And if you need any help at all with your account or with the software in your portfolio, please do contact us at support@sharesight.com or contact us through the channels that are made available to you in the help tab within the application itself. Okay, and also, just our disclaimer here, please do understand that this webinar and the information shared is for informational purposes only and does not constitute a product recommendation or taxation or financial advice and should not be relied upon as such. Please always check with your advisor or accountant to obtain correct financial advice for your situation before acting on any of the information from, I should say, today's session. So these views are my own personal views, and Sharesight does not hold an AFSL. So please, anything regarding tax, anything in the lead up to the end of the financial year, we always ask that you get your accountant's opinion because we're just a software company. All right, let's get into today's session. So tax loss selling. What is tax loss selling? It's also known as tax loss harvesting, which is a rather American kind of marketing phrase, but you might see that out there as well. It's a strategy that investors can leverage to minimize their capital gains tax during a financial year for tax purposes. So you can use losses from one investment to offset the tax owed from a capital gain on another. That's all a bit jargony. So in layman's terms, this is the way I think about it. If I'm going to be selling an investment and will owe capital gains tax because I've done well on an investment and I want to crystallize those gains, I might as well consider selling a poorly performing investment as well to lessen the tax owed, right? And June has typically been the time, the lead up to 30 June, that investors start to examine any losses that they're sitting on for the tax year. But really, you can do this at any point throughout the financial year as well. If you're crystallizing gains and crystallizing losses. And this year will be quite interesting to see what people do around the 30 June mark, given that we've had so much volatility and a lot of us are sitting on more losses than we have been in recent years. Things to remember, the same long-term and short-term discounting rules apply to capital gains tax. So if you've held an investment for longer than a year, you are subject to long-term capital gains tax. If it's been less than a year, it's considered a short-term capital gains in terms of its discount. A tax loss, by the way, is a loss is a loss is a loss. It doesn't matter how long you've held the investment. The entity that you're using to invest will also determine any CGT discounting that you might benefit from as well. And I'll show you that inside the software in just a second. For Australian investors, we give you three options in terms of setting up your tax entity. The sale allocation method, so FIFO and LIFO and such, will affect your taxation and the bottom line in terms of the tax that you may owe as well. And then finally, too, this is a very important point. A concept known as wash sales are not allowed by the ATO. And they will catch you on this stuff based on the trading information you submit and based on the information they have access to through brokers. A wash sale is basically selling a loss-making investment purely for the benefit of tax purposes, only to buy it back again in short order in the next financial year. So in other words, if you're considering using any losses inside your portfolio to mitigate tax, make sure you're doing it for the right reasons and make sure you're doing it on something that you truly want to dispose of. If you kind of center your investment behaviors and patterns around maximizing tax or paying less tax, I should say, you're probably going to spend more time worrying about that and less time finding quality investments. So again, think of this as something as a useful way to dispose of something that you truly want to liquidate in your portfolio. And then finally, how I use tax loss selling personally, I think of it as a way to minimize my cap gains tax where possible. And honestly, it forces me to be disciplined when it comes to hanging on to something for too long. And I think Marcus Padley said this really well. He's a well-known newsletter writer and market commentator, writing in Cufflinks, now known as First Links, back in 2015. I won't read you the entire quote, but I will leave it up there for just a few moments. But he does go on to say, the stocks, et cetera, the small liquid cock-ups that shout, idiot, idiot, all those short-term trades that became long-term investments, yes, them, the crap. So I look at 30 June, perhaps like Marcus looks at 30 June, which is kind of a time to do some winter portfolio cleaning. So with that, I will then transition over to Sharesight, and I will show you how our software can help you identify tax losses and tax gains as well. I think it should go sort of without saying that that this is sort of an Australian-centric example, despite my accent. I'm here in Sydney, and this webinar is intended to highlight the 30 June tax year, which is the Australian financial year. And the account that you're looking at here is an expert plan domiciled in Australia. So it'll have the Australian taxable income, unrealized cap gains, and capital gains tax as well. So if you've joined us on any earlier webinars, we're running about a webinar a week now. My portfolio might beginning to look a bit familiar to you. This is a sort of a proxy of a real portfolio that I own. I like to use kind of real examples where I can, because I think it makes these demonstrations all the more sort of tangible. So what I'm going to do, I'm just going to go in and create a new portfolio. I'll do that from here, just to show you a really simple example, and so we don't get confused by all the other clutter that's going on inside my core portfolio. So let's just call this tax loss example. You can see here, tax residency is Australia. That's just set by default, financial year 30 June. And then here we have our tax entity types. And you can see we've also labeled for you the capital gains discounts that each one of these enjoys. So 50% for just a discretionary trust, 33 1/3 for SMSFs, and a nil discount for company accounts. So for today, I'll just keep this at individual, and I'll create my portfolio. Now we're going to be asked to set up the portfolio. This is a kind of a useful reminder of the different ways that we've made available to you to create your portfolios. You can manually add trades, which is what I'll do in just a second. This is useful for people with maybe 20 or fewer holdings in their portfolio. It's a nice way to really get a feel for how the software works. You can import from one of our 12 broking partners, or you can import a CSV spreadsheet file as well if you've been maintaining your own records, or if you prefer to just download from a broker or elsewhere and upload that into Sharesight. You can always go back, by the way, and mix and match these type of ways to get started too. So just a bit of a sidebar there. So let's manually add a trade. And for today, I thought I would use a stock that I actually hold. Let's punch in shares in 0. So XRO will find our mates at 0 listed on the ASX. And let's say I was smart enough, I wasn't, to buy 0 back in 2015. And let's just say we bought this on the 1st of June, 2015. That's a buy trade, and we're going to buy 100 units. And you can see that Sharesight very conveniently populates the closing price on that day 5+ years ago, which was $19.15, which, if you've been following 0, you'll know is an awfully cheap-looking share price based on what this company has done. I'll leave brokerage just at nil for the example, and I'll save. So now I have my portfolio set up. I always like to switch to performance. And you can see I'm sitting on a nice gain of almost 52% annualized for my investment in 0. Now what I'll also do is add something else. So in this case, let's say I had the brilliant idea of investing in high-flying law firm Slater and Gordon. And let's say that I did that around the same time 5 years ago as I did my zero investment. By the way, Sharesight has about 20 years of ASX data. So, you know, you've got share prices and dividends and corporate actions going back 20 years. So when you're setting up a portfolio, you can go all the way back if you do so choose. Let's say that I bought, again, let's say it's 1,000 units of Slater and Gordon for $6.20 back 5 years ago. And again, if you followed this stock, you'll know that $6.20 looks awfully expensive based on where SGH is today, which is, of course, why I'm using this as an example. And I'll save that. Okay, so now we have a basic portfolio worth $9,000, and we have our two holdings in it, and my annualized return has been 51.97%. Now, just as a bit of a sidebar, I wanted to show you something that Sharesight does on your behalf, which is a powerful feature of the software. You'll note down here that I have my zero holding here, and I also have my Slater and Gordon. And you can see this number 2 here in this orange box, which says we have 2 unconfirmed transactions for this holding. Whenever you see those little notifiers in the software, you really ought to go in and have a look at them. Typically, they relate to dividends or distributions that we encourage you to check and to confirm. But in this case, look at SGH, we have a dividend paid in October of 2015, so that's in there for me to confirm. But I also have something that's appeared in the trades and adjustments section, which was a share consolidation in 2017. And this, if I pop it open, was created automatically for me by Sharesight. And it's a consolidation of 100 units down to 1, which might tell you something about the performance of this company and all that, the pressure that it was facing. Which again is why I've used it as an example here. So you can see we've consolidated our number of units from 1,000 down by 990, and so now I have 10 units of SGH. So that's been handled for me automatically by Sharesight. And obviously you can see in this case that I'm sitting on a fairly significant loss for SGH. If I then go into the reports section, what we want to do here is we want to focus our attention on the unrealized CGT report. If we're thinking about this in terms of how most investors are thinking right now from, say, 4 June up to 30 June, these will be positions that they have not yet realized, not yet crystallized. And so you use the unrealized CGT report to examine what you're, I guess, sort of sitting on and how you might hypothetically think about what you might dispose of and the impact it'll have on your tax obligations. So if we go into this report, just another little tip here. Always, when you're running reports, make sure that the date of the report is what you want it to be. I apologize for the barking dog in the background. Just one of those working from home scenarios. Make sure that the date of the report is what you want it to be here. In this case, we're showing unrealized capital gains as at today. But this is especially important if you're looking at the capital gains tax report. You want to make sure you're looking at that typically as at 30 June for any given year, because it will dictate all the information on the page below. So you can see here that I've got a long-term capital gain unrealized in my zero investment, and my gain here is a whopping $7,139. And you can see below that, I have my capital loss unrealized in Slater and Gordon. And in this case, my loss is almost the entire value of the initial investment, $6,192.10. So what you can see here is Sharesight, based on 2 very, very simple examples, we just whacked in 2 buy trades, has categorized both long-term gains and the losses automatically. Right? So you can imagine if you've got a large portfolio with, say, 50 or 100 holdings, if you're doing a lot of buying and selling within investments themselves, this report is really valuable because it's actually classifying all this stuff automatically on your behalf. So all you need to do is just go to the menu, run the report, and make sure you've got the correct date range set. And if we scroll down here to the bottom, what we do is we build these nice summary tables which kind of show you the mathematics behind this. So in this case, I've got no other method capital gains. And here, this is showing me down here, capital gains on shares applicable for discount method long-term gains. So you can see my long-term gain there of $7,139, less my capital losses offset from my investment in Slater and Gordon. And you can see that even though I've made a terrific gain on zero, my capital gain net of the SGH loss is only $473.45. Right? So it's a nice summary that's always updating on the fly for you as those trades come into Sharesight. So everything is done in real time on the fly. I should also mention here too that these export functions are really useful for these tax reports too. So if you do want to export this, share it with somebody, print it out, share it with your accountant, you can export to Excel, to PDF, and to Google spreadsheets. And the summary table will come out along with it, which is really, really useful, I find. Just regarding using the software with your accountant, what you might consider doing as well is in the settings menu, there's a window for portfolio sharing. In here, you can invite as many people as you'd like into the portfolio. You just basically give it first name, last name, email address, and then you can give them the level of access as well. So what I like to do with my accountant, I give them read and write access. And that way they can actually go into my account and they can manipulate anything in there to ensure that it's accurate and to, I guess, give me the best sort of outcome from a tax perspective as possible. Now, just another note on the topic in general. What I'll do is I'm just going to jump over to my main portfolio. And I wanted to show you the sale allocation method and how that may change what appears in your capital gains tax report. So this is a larger portfolio I've got. And what I'll do here is I'm just going to find a holding. Again, we'll use zero. This, by the way, this holdings tab with the search bar is a really quick way to find something in your portfolio, so you don't have to go scrolling for it. Click on zero. This will take me to the zero page itself. And in this example, I bought 0 shares, 1,000 shares back in 2014. I bought another 10 units in February of this year, and then I sold 9 in March of this year as well. And I wanted to set this up because I just wanted to show you if I run the capital gains tax report. Now again, this is examining things that have actually happened in terms of losses or gains that have been realized. Let that load up. You see here we have a lot more action on this report. It's a bit more of a beefy example. You can see here we want to make sure we're looking at the right date range. In this case, I'm just looking at the entire history of the portfolio. So this is about 12 years of data. But you can see that Sharesight's classified this as long-term capital gains, discounted capital gains distributions, which come from ETFs, capital losses as well at the bottom. So you can see here that in this case, I'm actually sitting on what Sharesight is telling me is a capital loss in zero of those 9 units. And that's because of the way that I've set up my sale allocation methods. So you can see here that for this particular holding, it's set at last in, first out, because I bought the units on the 26th of February, disposed of them not even a month later, and that's the 9 that I most recently picked up. So it's the last 9 units that I bought, and I'm selling those 9 units first. And so it's showing me a capital loss of $144.09. If I scroll back up to the top and I change the sale allocation method, I'm given a few options here. One, I can change the allocation method at the portfolio level, so right at the top for all the investments, or I can do it for specific holdings inside the portfolio as well. So if I find zero on here, which is down here, you can see it's set to LIFO, last in, first out. If I open up that menu, you can see the options that we've built into the software for you. First in, first out, last in, first out, maximize gain, minimize CGT, or portfolio default, which is the top level setting for the entire portfolio. So if I just change this to first in, first out for zero, and I update, I'll get a warning. That's simply to give you an extra level of a heads up. If you've submitted your tax from a previous year based on the information that you're storing in Sharesight, we just want to make sure that you're aware that you might make a change that will change the data from what you submitted. We do have a lock date feature on these reports, by the way, too, which is at the bottom. And you can see now my 9 units of 0 have moved from a capital loss to a capital gain. You can see those right here. Because what Sharesight is now doing is it's going back and it's finding the first 9 units that I bought way back in 2014 and disposing of them on the 19th of March, thereby turning what was a modest loss into a modest capital gain. So that's just a really kind of simple example, but it does, I think, highlight the power of this feature. You can imagine, again, if you've got an extensive portfolio with quite a bit of trading activity in there, you do want to spend some time with this feature, or your accountant can as well, to maximize your tax position. If you're sitting on sort of significant losses and you want to just do this automatically, you can basically just minimize the gain, which will, in effect, maximize the loss of a particular investment to create the largest tax offset, if you like. Right, so with that is how Sharesight treats tax losses in your portfolio and how you can use the software to identify them. Again, just go to the reports, unrealized capital gains, and then you want to look for your tax losses down here at the bottom. This information will be used to offset any capital gains that you've made for the financial year. All right, with that, I will now turn it to questions to see if we've got anything in there. Here we go, a couple of questions here. Wash sales. Is it possible to use this technique to bring net gains to account? Not currently, actually, but interesting question. That's actually something that might get some traction in our forum if you wanted to visit the help tab and post that on the forum to see if anyone else has any thoughts on that matter as well. Just a question here on sort of plans and pricing. To access the Unrealized CGT, you need a subscription. Yes, that is correct. I demonstrated this today using an expert plan. We make our realized CGT available for all plans at Sharesight, for the Australian plans. The unrealized CGT lives within our starter, investor, and expert plans. Okay, folks, well, there's no more questions on that, which hopefully means that I did a decent enough job explaining how Sharesight can help you identify tax losses. I wish everybody a lovely afternoon, and thank you very much for attending.